top important stories that are happening in the global market. Let's get started with tracking that this morning. Now, inflation in the United Kingdom has actually returned to the Bank of England's 2% target for the first time in 3 years. The CPI for the month of May came in at around 2% versus 2.3% in the previous month. Food prices providing the biggest fillip for the downturn and downward move that we saw there. Do remember that the fall follows nearly 3 years of above target inflation, and despite the decline, few economists think that the Bank of England will reduce interest rates from 5.25% as policymakers continue to be worried about the scale of the price rise that is possible, especially in the service sector, and the pace of wage hikes, which is a rising risk on an inflation relapse if the rates are eased too soon. So everyone is quite alert on that front. We'll wait out for more commentary on that, because Bank of England's rate decision is also something we're watching out for today. Let's move on and to some update from New Zealand. New Zealand's economy exited the recession with a modest expansion in the first quarter. The GDP, that's a gross domestic product, gained almost 0.2% from the previous quarter, when it declined 0.1%. What economists are highlighting, economists expected that 0.1% growth would be there. GDP rose by 0.3% from the year earlier quarter, and beating the 0.2% estimate. Now, despite the headline increase, details were mixed beneath the surface, with only 8 of 16 industry sectors expanding during the quarter, led by rental, hiring, real estate, service, electricity and generation. So, two positive news that have come so far. Let's move on to some updates coming in on the China front, and what we're talking about is rating agency Fitch no longer expects China to cut its policy rate this year. Instead, delaying such a reduction to the next year as the US Federal Reserve is keeping its interest rate high. Fitch now forecasts that China will keep its one-year medium-term lending facility unchanged at 2.5% and cut it to 2.25% in the next year. And that is what we read as a data point even right now. Other than that, remember, in the month of March, the rating agency had a forecast of one cut for FY 2024. Moving on and shifting focus to some geopolitical issues that have been happening, and Yemen's Houthi militants are believed to have sunk another ship in the Red Sea. Red Sea issue has been going on for a while, and now the global shipping players have urged action to stop attacks on the merchant ships. The Houthis and other sources previously identified the damaged ship as the Greek-owned Tutor that was struck by missiles and an explosive laden a remote-controlled boat. Now, the sinking of the Tutor marks the second drowning of a commercial vessel by the Houthis since November, and in what is being referred to as a show of solidarity with the Palestinians in Gaza. So surely those concerns about Red Sea issue is continuing, and that's causing a lot of prices in terms to increase, because Red Sea was the main route that comes in there. So keeping an eye out on that one. Moving on and centering the focus on climate now, based on news flows. According to a report, global fossil fuel emission hit an all-time high. Even as the shares of the fossil fuel on global energy mix were mixed and saw a mild downtick in the year gone by, overall, the global primary energy consumption hit an all-time high of 620 measures that are included there, as emission exceeds 40 gigatons of CO2 for the first time.
If you like this video, then like, share and subscribe to ET Now.